here with the Cosmic Trading Academy, where we trade, travel, and train. And I'm here to talk about the wheel strategy. Today, we're going to get right into it. And I know you guys been hearing me talk about the wheel strategy, but what I really been want to tell y'all about is the fact that is the other side of the wheel strategy. You know, we talk about how you can sell calls and sell puts, and basically for income. So every time you sell something, if you're into options, then you understand that every time you sell, that means you get money coming into your pocket. Okay, and every time you buy, that means you have to pay in order to have the rights for an option, right? Okay, so then the problem with sometimes when an option, and everybody knows that every option contract is 100 shares, right? Okay, so 100 shares. So if you're selling an option for 100 shares, that means you're selling the rights to 100 shares. That means that you have to be able to afford to be able to pay for 100 shares of that particular stock. Rule number one, let me tell you guys something that I learned is that one of the what I was doing to protect my bottom line was I was purchasing the assets up front, because I thought that if you have the assets in your pocket already, if you already have 100 shares, then you can sell against that. Well, let me show you how this goes wrong. For instance, if you already have 100 shares, and I'll give you an example right here. Let me change this around. See if y'all can see that. Here's fuel cell. It's at a hundred. It's at $3 and 69 cents, right? So I own 100 shares of that. If you can see right there, 100 shares of fuel cell, right there. Actually, I own 102 shares, right? Today you can see September the whatever today is. Um, it's up $10, but I'm down. If you notice, that's $65 since I've been holding this for this wheel strategy just to test it, right? I'm down $66. Now let me go and show you what I did. As you can see, here's my fuel cell call that I sold. One sale for $4.50. Well, what happened? It did not reach $4. It's not at $4.50, which means that that call would never be executed. They'll never exercise me on that because the reason why is that I sold it in the event that it reached 450. I have to buy it. I have to buy it. But the reality is it never reached 450. You see what I'm saying? It never reached 450, so I don't have to buy it. So basically, and I already own 100 shares right here, 102 shares, so I can sell my shares at $4.50, right? And so basically, $4.50 I'm selling. If it reached 450, then I have an obligation to sell. You see what I'm saying? If it reaches 450, I have an obligation to sell. You see, if they want to, but it never reached 450. It only reached three. Let's see, the highest point it reached in the last thing is right about here, which is 436. That's on September 14th. So, you know, so therefore it didn't exercise. And then since then, the bad downside is that it has fallen. You see that? It's fallen, fallen, fallen. You can see. So if you're holding on to 100 shares, then you risk the potential of that stock continuously falling like fuel cell did for me, $68. And then so that's the downside of purchasing it ahead of time. So I would say that if you're going to do the wheel strategy, first um, sell the puts first. So basically, what you're doing is you're selling the option that whenever it falls to a certain price that you want it to fall to. Say, for instance, I'm going to sell a put at $3 on fuel cell. That means if this should ever fall to $3 on in that time frame that you put in it, that whatever the time frame is. For instance, this one is expiring 9/30. So say for instance I sold a fuel cell call a put, not a call, because call goes up, puts go down. I want it to go down, and I sell that option to somebody saying that, hey, you know what? Should fuel cell fall to $3, I'll pay for it. I'll buy 100 shares from you. So that's what you should start your will strategy off with. Don't start it off with owning the stock already. Now, if you already own the stock, it's a different story. But if you don't own the stock, don't do like I did and purchase the stock ahead of time. I knew that's not the will strategy, but I wanted to have possession of the stock already anyway because I love fuel cell, and I didn't really want to wait until fuel cell became available or until one of my put sales came through, because it could have just kept going up and then I would have lost all the profit. But the reality is that if you want it at a certain price, sell a put for that price first. See, if I look at the time frame, let's see, this is 1 month of fuel cell, and we're on Robinhood, by the way, if you didn't know. If you look at the 3 month time frame on Robinhood of fuel cell, and if we look at that, you can see the low of is at 324, right? In the last 3 months. So right now, it would be great if you sold a put at around 325 or so, or maybe 330, give or take, because you know that's the low of fuel cell in the last 3 months. So you sell a put at $3.25 or $3.30 if you just want to get it before everybody else try to jump in. Get it at sell a put at $3.30. You know you're getting it at the bottom of the last 90 days. So that means you have all of this potential profit for it to go up. You see that? Up to in August 15 was $5.17. That means you sold it at the low, or you bought it at the low, and you could sell it at the high. And then so what you do is you turn around after you sell them the put, and it gets exercised, or you get forced to buy it. So now you got a fuel cell at $3.24. So you got 100 shares at $3.24. Now you turn around and you sell. Now keep in mind, when you sold the put to these people, telling them that you're going to buy that if it reached $3.24, guess what? They had to pay you for that up front. Whether you bought it or whether they end up making you buy it or not, they still have to pay you a fee. So that's the cool part about this. You still get paid when you're selling either way. It doesn't matter. So whether you get exercised and forced to buy it, or you get exercised and forced to sell something, either way you got paid up front for it no matter what. So that's what's sweet about this. The second thing that's really what you want to do, what I've been really making sure I do, which I'm not doing on this particular back testing strategy, is because I'm on my other account. I only do this with ETFs. So that way I make money on both ends. So when I sell a put or sell a call, I make money. But on top of that, I also make money with the dividend. So that's an important thing to remember. So in this particular case, say for instance, we wanted to buy, uh, um, if we wanted to sell, uh, um, let's see, an option, we go to trade fuel cell options, and mine's is almost expired on this one that I have open is expiring on 9/30. So if you will see that in the frame, and I wonder if I can make this without messing up the whole. Oh, yeah, that doesn't work. It doesn't like that. Okay, so anyway, you might be able to see my 450. There it is. You see my 450? If fuel cell reaches 450, it's gone. Okay, but it didn't. I don't think it's gonna do it. It's at 367. So anyway, so I got paid for that, and that was $20 at the time. Right now, they're only selling for it about $20, $2. But at the time when I sold this, it was $20. So I made $20 no matter what. And now if somebody takes it from me, that would mean that this price of fuel cell reached $4.50. But guess what? You know why I win on both sides? Number one, I got paid $20 on premium when I first bought it. And then I turn around, I own fuel cell at $4.30. That's how much I paid for fuel cell at the time when I bought it. So that's the reason why I sold it at $4.50, because not only would I make my $20, but I also make another $20 on top of that for selling it at at 4.50. So, and if they don't buy it, guess what? I'll turn around and sell it again. It's 9:30 is this expiration date, right? So in a few days, I'm gonna have the option to. A matter of fact, what I'm gonna do on Friday before it expires, I'm gonna go ahead and roll the option. And the reason why, and I learned this from Uncle, shout out to Uncle Henry and shout out to Kelvin. Um, the reason why you roll it on Friday is because don't forget about delta and theta. So theta is time decay. And when you sell an option, time decay is in your favor. For instance, if you want to, you can click on this and see, maybe it'll show us. Okay, so you can see delta right here, gamma, and theta. Theta is time decay. And so when you're selling options, time decay is always in your favor. That's the great thing. When you buy options, it's killing you. But when you sell options, it's your friend. So you want that theta to be as high as possible because that's money in your pocket. One, two. So it's probably about 98 cents or something like that. I think a day that this is going, that makes me money, 98 cents a day. So give or take, and if y'all think I got that wrong, somebody say something in the comments below. But I believe that's 98 cents a day that I'm making in theta. So, and this is going to expire. So on the 30th, as you can see, right? So so if they don't do anything by the 30th, guess what, y'all? I fucking got my $20 up front, and I get to turn around and resell this again. I didn't sell my stocks. I still got my stocks at the average price of $4.32. And if it should reach $4.50, which is what I sold it for, if it should reach $4.50, then it's no problem. I sell it to them for $4.50. And guess what? That just means I made another $20 on top of my $20. So if y'all feeling that, y'all give me a shout out, man. Subscribe, man. Like it if y'all like this whole thing. But go back to what I said, and I'm gonna sum it up right quick. Make sure that you go ahead and you sell. Make sure you sell a put first, in my opinion. Now, this isn't financial advice, man. I'm just telling you the thing that you have to have patience. So that's the 450 right there, right? So if you sell a put at a real cheap price, and remember we looked at the 90-day low. The 90-day low was like $3 and something. So if you sell a put right here at $3, you can see they only gonna pay you $1 for that up front. So it ain't no real money up front. But this is the thing. What a lot of people will do if they have the money in their account is they'll sell a bunch of these. You know what I'm saying? Like they'll sell 10 of these at $3.50. They'll sell 10 of those. And guess what they'll get? $80. And this one's expiring at the end of this week. So they'll make $80 selling it at $3.50. Now that's really close right there. So I wouldn't probably sell it at that price. At this time now, I'd sell it at $3. And somebody might sell 10 of them at $3 because they can afford to spend $3,000 or $3,000. Yeah, that's how much that would be. Because basically one of them would be 300, 10 of them add another zero would be 3,000. So they might have $3,000 in their account and they willing to risk buying fuel cell and willing to take fuel cell at $3, which that ain't a bad deal if you ask me. So not only did you get your $10 up front for holding on to that stock, holding on to putting that option in order for the week, but also you're gonna get fuel cell at $3. Now we already know from looking at it that fuel cell will fly up to over $5. So just imagine you got it for $3, you hold it, now you start selling calls on it. You start selling calls on it for $5. And so then what happens when it hits $5? Somebody, if you sell calls for $5, when it hit $5, now you're forced to sell it at 5. But who cares? You bought it at 3. So if you bought it at 3 and it cost you 3,000, you sell it at 5, you just made 2 grand. Feel me? Okay, guys. Well, y'all think about that, man. Let me know what y'all think. Once again, like I said, I'm Arad Youssef, Mr. Cosmic Training Academy, man, where we trade, travel, and train, man. We excited about this shit. If you're excited about it, man, smash that like button, man. Let me know. And I'm gonna keep on bringing videos. I hope this helped y'all, man. Like I said, I've been trading for like over 5 years, and I'm just, this is just what I love doing. So I hope it helps everybody. And I'll see y'all in the next video. Appreciate it. See you.